I'll call the Budget Finance Audit Committee meeting into session at approximately 6:01. Call the meeting to order. Any actions on any requests for excused absences? We know. Mayor, would you lead us in the Pledge of Allegiance?
I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Be seated. Okay.
Would you like a roll call? Thank you. Member Andrew Forster. Alternate member Wendy Fuller. Member Anna Olvera.
Here.
Member Joanne Roberts. Member Stephen Martino.
Here.
Vice Chair Richard Beneke.
Here.
Chair Steve Cooley. Sharon Geiser. Councilmember Santos.
Here.
Mayor Carroll.
Here.
Okay. I received notification later this afternoon, actually, via email from Nicole Wheelwright that Mr. Cooley will be absent due to a death in the family. And Treasurer Geiser will be absent. And alternate member Wendy Fuller has resigned. So we have two excused absences and a resigned member. So I'd like that reported in the minutes. Okay. Any adjustments to the agenda? Any conflict of interest disclosures? Okay. First item on the agenda, well, let's see, we got public comments. Put it down at the bottom of the, that was I'm sure it was an error. Any one person may address the committee on any matter not on this agenda. If you wish to speak, please fill out a public comment form provided at the back table and give it to the committee chair or secretary. There's a 3-minute limit on public comments. There will be no sharing or passing of time to another person. State law prohibits the committee from discussing or taking actions brought up by your comments. Do we have anybody that has?
Yes.
Okay. Do I have those here?
No, I have.
Oh, yeah.
Judy Bingham.
Judy Bingham, 115 Minnesota. I'm sure you don't care what I have to say, but isn't it time to hire a real city clerk? This has gone on with this amateur hour here for way, way too long. This is disgusting. You can't just make up rules as you want to. It's time to make this a real city, not a corrupt city.
Anyone else wishing to address the
Not at this time.
committee? Not at this time. Okay. Approval of the minutes of April 2nd, 2018. I'll entertain a motion to approve.
I'll make a motion to approve the minutes of April 2nd, 2018.
Is there a second?
I'll second it, yeah.
Okay, which one, Ray or?
No, he doesn't.
Sure, when you want.
Keep it through.
Okay. Just a comment on the minutes. I sometimes have a problem when we do have some discussion and some interesting ideas and stuff come up. I'm kind of hoping that maybe those can, in the future, try to be captured and reported as much as possible. And I think this committee, although we are a recommending body to the city council, I think items that we recommend ought to so be noted and voted upon as recommending to the council, or when we, 9 times out of 10, what we receive is just that. We receive a lot of information, and we go over it, we question it, we discuss it. At the least, it probably should just be noted that we received it, discussed it, and filed it as an action of this committee. Things that are just reported, if anybody was to pick up the minutes and take a look at them, they're just items. They, really,
They don't
reference.
mean nothing, huh? It's been like that for
Well, I'm
3
just saying,
years.
they just, they reference what we discussed, and that's important, but if we do take any kind of action, that also should be noted. Okay, all in favor of approval of minutes? Aye.
Aye.
Okay, so approved. Item number 2, City of Beaumont draft audited financial statements for the fiscal year June 30th, 2017. Draft audit attachment forthcoming, which we did receive a copy of it.
Good evening, committee. We're here this evening with the draft of the audited financial statement that we said we were going to have to you sooner. The timing did not work out the way that we planned, but we do have it this evening. Also with us is partner of the Penn Group, Vanessa, and she is here to discuss the audit report with you so that if you have any questions, we can then address them after the presentation.
Good evening, Chair, Mayor, and members of the Finance and Audit Committee. I'm Vanessa Burke. I'm a partner with the Poon Group. I'm actually based in our Walnut Creek office, and our firm has 5 offices across the western U.S. We've got 3 offices in California, 1 in Nevada, and 1 in Arizona. I'm pleased and honored to be here in front of you tonight, and I know this is the first that you've had a chance to take a look at the draft. We talked about it in the last meeting. That we would try to get you an advance copy. With the progress that was being made on the capital assets, it just took longer than we anticipated. But I think you'll be pleased with the results that you see. So to aid in our discussion this evening, I put together some prepared slides that'll walk us through each of the pages of the financial statements. And then at the end of that, I would open it up to any remarks, comments, and we can go back through the book as necessary. The goal is that we will have this also presented tomorrow night in draft to City Council with then a final to be finalized shortly thereafter, which would come back to City Council for final approval. So for purposes of my presentation this evening, I'm going to briefly go back over our scope of work and what you have in front of you today. I'm going to talk about our audit standards for required communications, what our responsibilities are under those required communications, as well as management's responsibilities. I'm going to give a brief overview of the financial report, and I put the word comprehensive annual financial report in there. It's not a CAFR, but it is a comprehensive report of the city's financials. And also, we will have some key financial indicators that we pull out of the CAFR, or out of the financial report that we'd like to present to you, including key pension information. We'll talk about implementation of any new standards that are upcoming or that have been incorporated into this audited financial statements, as well as any audit results that you should be aware of. So our scope of work for 16-17 basically includes the financial audit, which is a basic financial statement, and an independent auditor's report. It is not a CAFR, but includes most elements of a CAFR. There are some that are excluded that we would need to have to incorporate in order to go forward with a GFOA award. The other reports we are engaged to do is an annual expenditure limit report on the GAN limit. We are working on that report. That's in progress. We will have that report to you for the Finance and Audit Committee meeting on June 19th. That will be finalized in advance of that meeting. A report on internal controls and compliance. If we have any recommendations, as I talked about in the last meeting, that are significant deficiencies that we found in our audit or material weaknesses, they would go in that letter. And then the third is a management letter, which are other matters that we don't deem to be, in our judgment, significant deficiencies or material weaknesses that we want to bring to your attention to help improve operations or financial reporting here in the city. And then the last, we bring to your attention that we are engaged for other non-attestation audit service, other non-attestation services. And the reason we bring that to your attention is that as a council, you've engaged us to assist in the preparation. And we say assist in the preparation of the financial statements because we cannot prepare the financial statements and come up with estimates or judgments that are in there or post significant journal entries. Otherwise, we would be auditing our own work. So it's important to talk about that we do that, but we have safeguards in place that we look at to ensure that clients have the ability to take responsibility for their own financial statements. That you have a qualified CPA on staff, they understand what a GAAP reporting is, government accounting standards. Those are all important elements to ensure that we maintain our independence in the audit, and we've done that here. So the next slide is really what we are required as auditors to communicate to you as those charged with governance, as well as to management. Both of you are responsible and are charged with governance of the city. The audit responsibilities fall on us, that we actually are engaged to perform the audit and then report out significant findings from that audit to you. The other is that we need to communicate to you annually any significant accounting policies or changes in policies that might have taken effect that impact the results in the audit, any estimates or any disclosure items. And I think for purposes of this financial statement, when you actually get through the book, there are some significant estimates and judgments that are involved in any city financial statement and in any financial statement. And that's really an important element of the audit. And one of those is really that your investments are stated at fair value. And there are 3 categories of fair value in which an investment can be valued, whether it's readily traded, et cetera. The valuation of your capital assets. This is a major change in this financial statement. It was a major undertaking for the city. As we discussed under GASB 34, it typically allowed a 4-year period for agencies to implement and put their infrastructure assets on the books. The city has done that in less than a year. So really that valuation of capital assets is an important estimate included in here. The other is depreciation. Once you've estimated and valued and placed on the books your capital assets, significant judgment is involved in determining useful life of assets, how long it's going to be in place, and how long that's going to be depreciated. And that's important because that actually flows through on your income statement and impacts your statement of operations. The other is any other post-employment benefits or net pension liabilities. You don't have OPEB here, so that's good, but your net pension liability, it has a ton of assumptions in it because you're in a cost-sharing multiple plan with CalPERS. And that means that you've got actuaries at CalPERS that are coming up with assumptions and estimates of mortality, service life, how long people are going to live, what the benefit payment structure is, what the discount rate is that's going to be earned on the investments at CalPERS. And all of that comes down and affects your financial statements. So you need to be aware that those are the areas of higher risk where there's any kind of estimate or judgment, and we look at that during the audit. I'm going to point out a few footnotes that are here. You have this in your packet, but as you go home and you're going to take a look at your financials, I would suggest that you take a look at these footnotes. These are what we deem to be significant footnotes for the city of Beaumont. One is significant accounting policies. We're required to communicate to you significant changes. Note 1E is the capital asset footnote, which talks about the infrastructure and the reporting of the infrastructure. And I have a slide on that later. Note 5 is going to be the detail of your capital assets. Note 6A is the long-term obligations we've placed on the financial statements the Beaumont Financing Authority as a component unit. That is a new change in this year's financial statement. It was not picked up by the prior audits, and we have restated the financial statements for the prior year, and I'll walk you through that. Note 7 are the disclosure of the revenue bonds, and separately debt without city commitment are the special tax bonds on the property. Note 10 is your PERS footnote. Note 11 is any deficit net position. or any fund balances, and any expenditures that have exceeded your appropriation level in the budget. Note 12 is classification of fund balances. That is essentially looking at your fund balances within your governmental fund types and allocating it among restricted, assigned, committed, available, unrestricted. Note 13 is a description of prior period adjustments that we made to these financial statements, meaning we've changed the beginning balances that existed in your prior issued reports, and we changed it for things that were material, such as the capitalization of the fixed assets. And that's because we retroactively report those fixed assets on your books. The last two, commitments and contingencies, as well as subsequent events. You had an advance refunding done subsequent to your end, as well as you entered in, we're talking June 30, 17, you guys moved way beyond us. We're looking back at time, but you entered into your SEC settlement, and so we have that footnote in there as a subsequent event to these financial statements. The other required communication in an audit is that we talk to you about the entries that we find during the audit. Some of them are things we work with the client on in order to get those posted in the financials, like the capital assets. Others we find during the audit. And then there are other entries that don't rise to a level of our judgment of materiality that we accumulate in the audit, and we look at it in total at the end of the audit, determine if it's actually material to the financial statements overall. And if we didn't post those entries, would it cause a misstatement in the financial statements? So I'm going to walk through these with you because I think it's important to understand the impacts of some of the numbers that have flowed through this financial statement as a result of this audit and putting the capital assets on there. In order to correct the capital asset accounting, do all of the inventory and all of the valuation, which includes all the estimation of value of those assets, it has increased your overall governmental activities by $235.7 million. That is net of accumulated depreciation. I referenced note 5 because if you want to see the gross amount and then the accumulated depreciation, you'll find that information in note 5. Business type activities, so this is your sewer and transit. We increased these funds by $53.5 million. This was a result of all of the work that Milana and her crew have been doing for the last year. And then again, that number is the same for the proprietary funds for the sewer fund. The second item, which is a prior period correction of the prior year, is actually reclassifying the Beaumont Financing Authority out of agency funds into a blended component unit debt service fund as part of the city's financial statements. The reason that is done is because the Beaumont Financing Authority meets the criteria as a component unit. And as if it was a standalone entity, it needs to be brought into the city's financial statements as a component unit, as a blended component unit. That's what GAAP requires. So that means that its investment in the local obligation bonds issued by the special districts is reported in those financial statements. So you'll see an increase in the governmental funds fund balance of $229.5 million. That's how much the Beaumont Financing Authority is holding in securities issued by the CFDs. You will also see a decrease in your governmental activities net position by $211.5 million. It's an important number because that's how much the Beaumont Financing Authority has issued in revenue bonds in the public marketplace. Does that make sense? And then overall, those two net, and there's a net increase in the government-wide net position. So a total of $17.9 million. That nearly mirrors how much is held in cash at the end of June 30, 17 to be used for debt service. Entry number 2, we increased your claims liability by approximately $800,000, and that was done to match the actuarial report. Third entry that we found during the audit was really just to record and true up the liabilities to the actuarial reports for CalPERS. That entry was about $163,000. It increased overall the net pension expense. And then 4 was we reclassified mitigation fees to unearned revenue on a full accrual basis. to reflect the amounts that were unspent at the end of the year. And these are mitigation fees. So these are the fees that you're collecting under AB 1600, and you're using that for future development, future infrastructure, and it has a period of time in which it needs to be spent, or it's due back, right, to the person that paid the mitigation fee under AB 1600. And so until those projects are built, you do not, as a city, get to recognize the revenue. And this is a substantial number on your financial statement. So it should not be on a revenue recognition basis until you've expended the cost for the project. You would need to match the revenue coming in that you're using to build those projects of that local mitigation monies. The last entry, which I talked about, are the unposted entries, is a true-up entry that's the result of a transit audit that you have ongoing right now, basically concurrent with our audit. So their results are coming out at the same time our results are coming out. We've looked at their preliminary numbers, and overall, the adjustment was not material to make to these financial statements. But as time permits, we probably will consider making those just to get the two audits in sync before we finalize the report. I think the entry is around $236,000.
I have a question here.
Yeah.
Would the committee want her to complete everything and then go back and ask questions, or would you like to ask questions as we go through the report, or go through the outline?
I'm happy making notes.
Are you making
Passing
notes?
it in.
Okay, I'll continue. I just wanted to make sure.
And I'm
I'd
open
like
to
to
either.
a good question afterwards.
Okay, okay.
And what I can do is I can stop at a certain section, so once I'm finished with the required, before we move on.
A lot of information was coming
I know.
across, and I thought, oh, okay, well, wait a
It'll be
minute, let's
quick,
pause
though.
for a minute and let's see if you need to approach this in a different way, but, okay,
Yeah.
Continue.
It'll get clearer at the financial highlights.
Yes.
So that's just really the high-level results of the audit.
Okay, good, thank you.
Page 8, we are required to discuss with you if we encountered any significant difficulties during the audit. I say no significant difficulties, but I will say the accounting for capital assets is a huge undertaking, not only on the city side, but on the auditor side, to ensure that we just saw the numbers, right? That you've got nearly 200, and that's on a net basis, $280 million on a net basis of assets coming onto the books. It takes a lot to get through those assumptions and those estimates, and so we appreciate the extra time to get the audit done. My theory has always been you're better taking the extra time to get it right than to turn something in quickly and it be completely wrong. If we have disagreements with management, we're required to communicate that to you. We did not have any. And any consultations with other accountants, I would consider that to be what you would call opinion shopping. So before we were engaged for the audit, did the city go out and ask firms, hey, if I want to put something on the books, would you do it this way for me? That's what's considered opinion shopping. We are not aware that that has occurred, and it did not occur with us. Management's responsibility. So as we were closing the audit up and looking at the numbers that were coming on the books, we talked about the book, and really the 2 pages, there's only 2 pages in the book that is really our responsibility as the audit, and that's the audit opinion. We have lots of responsibilities underneath that underlie that opinion, but ultimately the financial statements that you're looking at tonight are yours, and they're also management, and you're responsible for the preparation of it, for the disclosures, and for recording things accurately within a material amount in those financial statements. In addition, you're responsible for presenting the financial statements in accordance with accounting principles generally accepted in the United States of America. For this entity, that's considered the Governmental Accounting Standards Board, GASB. You're also responsible for adopting sound accounting policies and applying those consistently from year to year, unless there's a reason for the change, and you have to have a valid reason. You should not change your policies multiple years. So we look at consistency of policy as it impacts financial reporting. Next is to establish and maintain your internal controls over financial reporting and compliance. And I talked to you in our last meeting about what we do with internal controls. And really, we're not here to test for the effectiveness of the internal controls, but only as it relates to our audit plan and building our procedures. We'll report to you any findings as a result of that exercise at the next meeting. And then management's responsible for providing the evidence supporting the amounts in the disclosures and the financial statements. And then last would be management, as well as those charged with governance, are responsible for establishing policies and procedures to prevent and detect fraud. Our responsibilities are to perform the audit in accordance with auditing standards that are generally accepted in the United States, and those applicable to financial audits that are contained in what I would call the Yellow Book or generally accepted government auditing standards. We're also required annually to communicate with those charged with governance at the beginning of the audit, during the audit, at the end of the audit. We are also responsible to assess your audit risk and your internal controls over financial reporting and compliance. We talked about those areas just a little bit ago in our required communications that are subject to estimation and judgment. Those usually generate higher audit risk as well as revenue recognition. We are responsible for determining that management has done what they needed to do for the fair presentation of the financial statements and for all material compliance. We're supposed to render our opinions on each of the opinion units, identify significant deficiencies and material weaknesses in internal control, and any recommendations to management if we have those. And so with that, I'm going to stop before I get into the detail on the financial statements, but you know, we will have more comparative numbers coming up. And I'm going to walk through the impact of those entries.
Okay. This is the time for us to ask questions, if there are any questions.
One quick one. The large financial report, it's got for discussion only, subject to change. When's the final one due?
So in the last meeting, we talked about this being a draft financial statement in the event that the Audit Committee weighs in on the financial statements and there is a change that will be made. We would produce that financial audit report shortly thereafter and come back to either Audit Committee or City Council on the 19th.
Okay.
Yeah. But I would anticipate, you know, I would anticipate minimal changes at this point.
Right. Okay.
We're not changing the numbers on our side.
Okay.
Other than the one posted in tree, if Milana says she wants it in there, I would post it for her.
Now, in terms of our schedule, since we are just looking at this basically for the first time, do we get another opportunity to look at it before it goes to the council, or 19th is a council meeting, right?
Yeah.
Right. So they would have until the 19th, right?
They could post questions that could come to council, either to the treasurer or some other method that we have some city council members that are on this committee that could also pose those questions.
Okay. That makes sense.
This is our time.
This will be our, I'm just wondering if the committee would want to meet the day before on the 18th, if there's any need for that.
Well, why don't we go through tonight and then see what we end up with? No? Maybe we won't end up with another need to meet, or maybe we will, if we progress. What do you want to make a decision now on the second meeting?
I'm just posing that as a possibility, okay? I'm not saying we do it, but I'm posing it as a possibility, depending on how the rest of the evening goes. If you all feel comfortable with what you're hearing, what you're seeing, then there's probably no need. If something comes up between now and the 19th, you could always send in your comments, and they will be addressed or given to the council to be addressed. So
And council will be going through this again tomorrow night as well, so you will have the ability to
post a comment tomorrow.
Evening as well.
okay, just want to make sure it gets the total review. I did have a few questions as you were going through, and not a lot of it is for my own edification more than material. In terms of the accounting of capital assets, which, like I said, it's just a huge thing, and it's really kind of never been done before. Once you get that all, you know, to everyone's satisfaction, does that then become a baseline for years going forth?
Yeah,
That
exactly.
basically, we're trying to establish a baseline, because we've never had anything like this
Yeah,
before.
yes, it would be your baseline measure of the value of the asset at its, estimated value of the asset at its historical purchase date.
Okay.
And that establishes the baseline. I've got a full slide on, if you flip through your book, there's a full slide on the capital asset accounting. That I'll go in a little more detail on that as well.
And then you mentioned on AB 1600 in terms of the liabilities, mitigation fees, unearned revenue, full accrual base to reflect accounts unspent. You mentioned something about time frame, and you didn't say what the time frame was for that money to be spent prior to going back to those who
Yeah.
paid the mitigation fees?
Yeah, it usually has to be committed within 5 years.
5 years.
It's a rolling.
Okay.
And I know other cities ran into difficulty with that issue. During the Great Recession, if you think about it, construction came to a halt for a
Right.
number of years between 2007 and 2012. And so many cities were stuck with the money they had collected, but they hadn't yet built the development. And so I think I have not seen any ramifications from that at this point. So it should be committed.
Were there any extensions giving on the time frame, or?
I haven't, there was no formal extension process in the legislation that was given during that time frame. But I just think the state didn't follow,
They kind of let it?
It's really the BIA that would come with
Yeah,
that.
okay, yeah, I understand.
Yeah.
Okay, that's it.
Okay.
Anyone else?
Yeah. Previously, we've had a presentation with regards to CalPERS unfunded liabilities as far as the retirement system. Are those reflected now in the audited books being
They are.
presented, and they'll be shown as a liability in there that will be able to be carried forward at this time?
They're in there, and I'm going to go over that a little bit and later on in the slide deck.
They were there last year.
And when we were going through the presentation and you're going over the responsibilities and roles of different entities, when you're reflecting the management's role versus the auditor's role, who specifically are we talking about as far as management? Because are we talking separate from council, or are we management, or are we an advised consent role here to the council? I'm trying to determine what the actual responsibility is.
As an audit committee, that you're an officially formed audit committee, you would have a level of responsibility to review. Essentially, you've been, I haven't read the charter necessarily, but you have been delegated some responsibility for oversight of the financial process and the financial reporting process. So you're sort of de facto deemed to have some level of oversight responsibility and being charged with some level of governance, but it would be in an advisory capacity.
Advised consent, and not in an active management role?
Correct, correct.
And before I forget, Andrew Forrester joined us a little late, but I want to recognize his presence and make sure he gets listed as being present at this meeting. Okay, any other questions? Continue.
Great, thank you. So now we're going to go through the meat of the financial statements, and if you would, and I'm going to try to do both of these, this table's really small, I need a bigger one. If you would turn to page 1 of the financial statement. So this is the comprehensive annual financial report. And when I said we have responsibility for 2 pages, these are essentially our opinion that we are rendering on the financial statements of the city, including its governmental activities, its business type activities, and for each major fund as determined in the audit, and the aggregate remaining fund information. That would include the Beaumont Financing Authority reported as a component unit within here, any component units. Again, we go through the responsibility, and our opinion on these financial statements is that these are fairly presented in all material respects. The financial position, as well as the respective changes in the financial position for those funds. So in short terms, that means you received a clean audit opinion for this year, which is an unqualified audit report. The prior year, you had an adverse opinion related to the fixed asset accounting. So we've worked very hard to get, Milana has worked very hard, we've only been here a year, but to get you to this place. However, we have two footnotes that we consider emphasis of a matter. One is the consideration of the change in the CalPERS discount rate. As you know, you're subject to the policy making of CalPERS as a participant in their cost-sharing multiple pool, and that has an impact on the normal cost and your unfunded liabilities that are accrued in the financial statements on a government-wide basis. Though we can't determine the impact that will have overall at this time, we know that they have built in, and it's included in the footnote, a 3-year ratcheting down of the discount rate to more closely align with real rates of return. What that does in turn to you as an agency is it increases your contributions and your unfunded liability to the plan. The other is that the asset and infrastructure capitalization is reported and discussed in note 13, that we've restated your beginning net position, meaning if you were to look at this financial statement with last year's side by side, which you'll see in the slides, they're not comparative because we have retroactively restated those opening fund balances or net positions in the financial statements. And that was done in order to correct the capital asset balances that have been omitted previously to comply with GASB 34. We did not modify our audit opinion with respect to that matter. The other is there's supplementary information included in this under other matters. That information is included for purposes of really supplementary analysis, budget to actual, but it is required supplementary information under our accounting standards, under GASB. We consider it an essential part of the financial statement, and we do perform some limited procedures related to that supplementary information. The management discussion and analysis you'll see is not included in this report. Much of what you would get from the MD&A you'll see in our slides tonight. And I know Milana is working on finalizing the MD&A for the final report. So I'm going to have you turn to page 20 and 21 of your financial statements. And so what we did here is we took last year's audited financial statements for 2016. Those balances, as you know, were audited by other auditors. And so we look at those, and then we perform some other procedures on the opening balance, like the capital assets. We have to test what the beginning balance would have looked like in order to retroactively restate. And so what we did for purposes of this presentation is showed you on a government-wide basis the changes between the assets of the current year and the assets of the prior year, going column by column. If you look at page 20, you'll see governmental activities, you'll see business type activities, and you'll see the grand total for the city overall. This is the city's financial statements on a full accrual basis. This is all your long-term assets on there, all your long-term liabilities. So for purposes of this presentation, you'll see that assets for the governmental activities are now $526.7 million as compared to last year. They were $48.2 million. That change of $478 million is really essentially comprised of two major things. One is the capitalization of the fixed assets, which you can see coming on there at $231.1 million. And you can see that your deferred outflow of pension resources for pension has increased as well by about $1.8 million. That's the next line item down. For liabilities, you can see that on the next page, page 21, total liabilities were $254.4 million this year on the governmental activities, as compared to the prior year of $24.6 million. And that's as a result of pulling the Beaumont Financing Authority in and blending it as a component unit in these statements. Okay? Correspondingly, the Beaumont Financing Authority holds investments in CFDs. So it has the debt and it has the investment in the CFDs. So on the prior page, on page 20, you'll see the investment in the CFDs of $205.7 million. About midway down the page under non-current assets. also in addition to the statement of net position. And then last, I'd go to the net position statement on page 21. You'll see your net investment in capital assets. The net investment amount is $36.8 million. And you might ask yourself, why isn't it the $220-some-odd million? And that's because you use debt financing to construct those assets. So under Governmental Accounting Standards Board reporting, for that line of net investment in capital assets, it's the amount invested in the asset less the amount of outstanding debt, because you haven't paid for those assets fully yet. So we net those two numbers together. So that is the actual net investment at this date, because you're paying for them over time. As you pay that bonded debt down, that number will continue to grow. The other section, total restricted of $253.9 million. The largest number there is $223.5 million. That's the amount of the investment in the CFDs. Those are the investments held by the Beaumont Financing Authority that are essentially liquidated with the special taxes and then are used to pay the revenue bonds by the city. And then the last item on governmental activities, you'll see you have an unrestricted deficit of $13.7 million. That coincides nearly with the unfunded pension liability for the governmental activities as of June 30th of 2017.
That actually went down from 16?
No, it would have gone up.
Well, you have it as,
Oh,
Yeah.
22 point, yeah, it's 22.2 in the prior year. It
Right.
probably went down because of other improvements in operations between prior year and current year. So it's going to be a net, so the net change of 8.6, there are two components. We have to break that out separately for you, because you're going to have positive net income in the current year as well.
yeah.
You'll see that on the next page, on page
Okay.
23. It's at 11.9 million. So government-wide summary, statement of net position for the business type activities. For here, this is the next column over on page 20. It's 103.2 million as compared to the prior year of 52.8 million. And that $50 million change should sound somewhat familiar, as that's mostly related to the capital asset accounting that we put on the books this year. Again, there was no bonded outstanding debt on this one, so the net investment in capital assets is $99.5 million as compared to the prior year of $50.7 million. So you can see that the net investment in capital assets increased by $48 million as a result of the capital asset accounting. Other than that, the unrestricted net position improved over the prior year by about $1.1 million. So I'm going to go through the statement of activities. So that's your balance sheet at a point in time for the governmental activities overall, including all assets, all liabilities of the city. Next, I'm going to go through the statement of activities, which is all the activities of the city on a government-wide basis. And that you can find on pages 22 and 23 of your financial statements. And the chart summarizes the key elements. So purposes of we're going to look just at the governmental activities, which is the top half of the book on page 22. You can see charges for services were $15.9 million in the current year. In the prior year, they were $9.6 million. There was an increase of about $6.4 million in the current year. Operating grants and contributions declined by about $9.1 million, and capital grants and contributions increased from $5.3 million to $12.4 million. Most of that activity is related to the CFD accounting for the assessments coming in for services, as well as for the capital construction that are now reported on in the governmental funds. Expenses for the governmental activities, which is on the next page, page 23. Oh, I'm sorry, back up, 22, 47, I hate that I do it backwards, 47.6 million. So you had 47.6 million in expenditures as compared to program revenues of 12.4 million for a net cost of services of 18.8 million negative. Which tells us that then the next section, you bring your general revenues in, all your taxes outside of charges for services, operating grants, capital grants, and that helps you to support your operations of 27.8 million in taxes, fees, business license, investment earnings, etc. Those are brought in, as well as you had a settlement agreement of $3 million that came in. So ultimately, once you pull your tax dollars in, that is not your self-supporting revenue, then you're down to a positive change in that position of $11.9 million. So that's a positive result. And that's us compared to the prior year. So I'm going to walk through that same set of schedules on pages 22 and 23 for the business type activities. So for this, you can see it's again on page 22 at the bottom. You'll see charges for services of 7.6 million, page 22, as compared to the prior year 7.4 million. So that's relatively consistent for your sewer and transit, changed by about 280,000. For operating grants and contribution, that stayed relatively flat. Capital grants and contributions went down from 1.5 million to 473,000. So overall, your total program revenue stayed relatively flat in sewer and transit this year. Expenditures went up, as we would anticipate, on a government-wide basis to 13.8 million from 8.5 million. The largest increases in these expenses that are coming onto the books is your depreciation on your capital assets. That's having a substantial change as compared to the prior. Same with the page before for governmental. So your net cost of services, when you include the depreciation non-cash item, is 3.5 million negative. Your general revenues are $8,600. So your net position on a business type activity change is a negative 3.5 million as compared to the prior year of 2.3 million. And that's a result of the depreciation being recorded on the capital assets. So now I'm going to move into everybody's favorite fund, which is the general fund. And I call this our catch-all fund. When it's not classified somewhere else, we put it in the general fund. And it's important to look at the general fund because that's really the fund and the source where you have most of your unrestricted money. And important to see that you're able to build reserves for sustainability of the city. And I think you'll like what you see here, which is that your assets have increased from 5.4 million to 8.9 million overall. If you take a look at page 31 and 32, you'll see that presented in detail. You'll see that cash is now a positive cash position of nearly $4 million. Liabilities and deferred outflow are 3.7 million this year as compared to the prior year of 9.4 million. And your total fund balance, which this is an important picture, is 5.3 million as compared to a negative deficit of 4.1 million. And that's as a result of the efforts that you've taken on the budget and to get control on the financials, as well as there is a one-time payment in there for repayment of the sewer bond payment that had gone out years ago. For revenue, you can see that detail on page 34 of the detailed book. Summarized on the slides, revenue this year for the general fund was 28.1 million as compared to prior year 26.1 million. So you have about a $2 million increase in overall revenues. Expenditures of 29.2 million in the current year as compared to 22.9 million in the prior year. So an increase in expenditures of 6.2 million. And overall revenues over expenditures this year were a negative 1.1 million as compared to positive of 3.1 million You will see down below in the other financing sources and uses, the transfer in of $7.6 million. That's part of the repayment of the sewer bond payoff that was paid a few years ago, as well as you have the $3 million settlement in there. So once you pull in those other financing sources and uses and the special items, you get to a positive change in fund balance of $6.4 million. So I'm going to stop because that ends really the detailed highlights before we go into key indicators, financial indicators, and I want to talk a little about the capital asset and infrastructure reporting.
Any questions to this point? Really, it's kind of an eye-opener for me to see how much these capital assets are affecting this budget, the balances from 16 to 17.
It's huge.
It's
Yeah,
huge. It's really, really huge.
It's huge. So let's go, I can talk a little bit about the capital assets, and I think that's important just to really understand the accounting requirements under the governmental accounting standards for it. And, you know, the capital asset and infrastructure accounting rules are required by local governments to include long-lived infrastructure assets. And when you look at what GASB 34 required, they required that to be implemented as early as fiscal year 2002, sorry. Long time ago. And so governments, this is not new, it's interesting because this is not new to us who are old like me. For some of us who are not as old as me, they haven't been through this before. And so I thought, well, this is going to be easy. We can just look at our old working papers and see how, you know, we tested this in the prior year. But really, the 7-year statute of limitations is gone and went. And so any work papers that we had from 7 years ago for any audit clients, and we have some major clients that we implemented infrastructure, those are all gone. And so we really had to kind of come back and refresh our memory on, even though we know infrastructure reporting, when you first initially set up the balances, how you go about doing that. But really, there are 2 allowable methods that an agency can use under GASB. And those are the depreciation method, and then the second is the modified approach method. I couldn't tell you, I maybe have seen modified approach method in one agency in my whole career. It's very complicated because you have to have planning. That's really where you get into maintenance planning for all of your assets. So most agencies pick the depreciation method, and that's what Beaumont has elected to do this year. And what that method is, and we call that the basic approach. And in order to do that, that means that all the infrastructure assets and all the capital assets that were not identified previously are retroactively reported as of the prior year. That's why we have prior period restatements in this financial statement. And we knew that was coming because the prior auditors had said that. What's important to understand in this, and because you saw those huge depreciation numbers coming through, when you get into large capital assets anywhere, even in Fortune 500 companies, depreciation typically isn't calculated on a unit-by-unit basis. That would be near impossible to do. So they look at capital assets as classes of assets or network of assets or a subsystem, and the depreciation is taken overall. Where individual assets, as you're doing ongoing capitalization, you'll have cars and vehicles and equipment, things like that that will come on. But typically, we look at systems overall. So depreciation isn't calculated. I don't want you to feel misled like every individual unit has a depreciation number. It does have it attached to it, but it's really done as a system or network of roads or bridges or sewer system, etc. The other significant estimate is useful lives. Under the accounting standards, you can use general guidelines that are obtained for professional and industry organizations, building industry organization. We look at information on comparable assets for buildings, for land. We look at comparable assets from other governments. So I looked at what a lift station bid costs across the country for multiple lift stations that other agencies have gotten outside bids in today's dollars. And then we build that back using an inflationary rate back to the historical cost date that your lift station, for example, might have been placed in service. Not easy to do, but we were able to get there. Also, you should be aware that if historical costs, meaning that the historical cost is not practical because of inadequate records, estimated historical cost may be used under retroactive application. Okay, so if somebody had elected prospective application, they couldn't have used an estimation process for that. So retro application is what pretty much every government in 2002, 3, 4, 5 used in order to put the information on their books. And what we see most often and what's most commonly used for that calculation is that you determine what the current replacement cost is, and we talked about this in the last meeting, of a similar asset, and then we deflate that cost back by using price level indices. And we do that all the way back to the acquisition year. So it's an implied estimate. It's not always going to be with the exact invoice that matches that estimate. So there's some subjectivity in there. So we look at that. We look for things that it's comparable, it makes sense, it's reasonable. We have hundreds of city clients. We could look at our other city clients to see what a lift station costs. We just go look at their fixed assets. We have neighboring cities here. So because we have access to that level of data in our firm, we're able to look at comparability within those agencies. For purposes of our audit, we've considered the methods and assumptions used by the consultants and management and determined those to be reasonable to fairly state the estimated fixed assets on the books, as well as the calculation of accumulated depreciation and depreciation expense. I'm going to go through quickly some key financial indicators that we always like to bring up, and I know people were surprised when I was talking about the deficit in the governmental activities as a cost of services to tax revenue. But what you can see here is that your cost of services in the current year are $37.3 million. That includes depreciation. Prior year did not include depreciation. And then you look at how much that is over the tax revenues that really you don't have control over, but you receive as a local agency. And essentially, you're looking at, you know, a 200 times from your tax revenues that you have to come up with and cover those costs of services as a city. And that's pretty substantial, 158%. So that number is going up. It's going up because you have depreciation in there. It's also going up because you have pension costs that are rolling in there. So your tax revenue is no longer, you're not gaining the traction from the tax revenue as you once had. Over time, we'll see those continue to go up as an industry.
That ratio is high because we put in the asset allocations.
Depreciation.
Depreciation.
Depreciation's
allocation,
in there,
yeah.
yep. Interest from the bond financing authority.
In your work with other cities, how does this ratio balance? I mean, are we really high? It looks like it's hard to change that.
It is.
But is that, I mean, are we kind of in the ballpark, or, I mean?
We typically see, and just for the committees, we do an annual survey each year of all of our California city clients and county clients. And I know Andrew, my senior manager, is here, and he can probably look it up. We can have the actual comparative number for you by the end of the meeting. But we publish a full study of these ratios for multiple agencies throughout the state, and we're going to give a copy of that to Todd so that he can look at it as you guys are working through your budget. All these factors that you'll see that I'm reporting are ones that we include in the report. You're not that far out of whack from what we see, but I do think that it's worthy of looking at as you're going into your budget process, because you're right, it's very difficult to raise other sources of revenue in the city in order to support your operations. And so the cost of operations, including depreciation, these are non-cash.
I mean, you know, just if a layperson were to look at this, they'll say, you'll never get out of debt. I mean, technically, you know, from an audit standpoint, you'll never be out of debt. But in reality, it is a good indicator, because what it means is you have to keep pushing hard to get additional revenue sources, or at least try to balance, you know, the income versus that outgo on a year-to-year basis. Yeah.
And tax revenues are always a focus for city government, how to raise sales taxes. You know, it's an important, are you bleeding sales tax to other neighboring cities because you don't have the retail here, but other neighboring cities are building retail, or cars, you know, auto sales is always the big one, or gas tax, et cetera. Are you bleeding out sales tax revenue that you could have captured otherwise? And I know you guys are, I'm standing between you and a budget, so I know you'll have healthier discussions during budget.
A
The
quick
other-
question, on the depreciation reflected, that would be in the cost of services, correct?
It's in the cost of service, it's built into this, it's a non-cash item,
Right.
but it's built into there, so if you were to go and look at footnote, I think it's 5, for the current year, and you wanted to back that non-cash item out, page 76 of the report, or 75 of the report. It's not as high as you would think. It's 4.8 million.
That's based upon an accrued level for the single year, fiscal
That's
year.
single year.
So when they took the capitalization and went back and established, since it's being basically absorbed this year, we're only accruing in the expense a single year of depreciation based upon an aging going back to the estimated
Yeah,
life cycle
Yes.
or acquired. There's a lot of calculations you have to come up with.
there are a
this.
ton. There are a ton. So simply is, first you have to come up with your inventory,
Right,
which is a major
which
undertaking.
we've discussed all that effort.
Second, you have to come up with the value, which is some of what I discussed on the method and the estimation used. And then you have to trend that back as to what the value was at its historical purchase date. That's the date that's set as your baseline for that asset. Then you determine its useful life, let's say 10 years, and it was purchased 5 years ago. You would have 5 years remaining of depreciation left on that
Okay.
asset. And so the amount of $4.9 million in governmental activities that's sitting there is its single year of that.
A single year of that.
It's the 6th year of the 10th.
We're not
year
making it
cycle.
all up on this year's expenses.
No,
Okay.
because we restated the beginning balance. So for the beginning
The ratio would
balance,
be
prior period
5,000.
restatement is the net carrying amount.
Okay,
So we had to catch it all back up with accumulated depreciation to the beginning of the year, and then book the current year's depreciation. Make sense?
yes.
Okay. Wow, you guys are tired. Okay,
No, we're just smart.
yeah, you're very smart. Good. So, next slide is really just looking at one other factor that we think is important, and really I think is a testament to the hard work of all of you here, is that your unassigned fund balance in the general fund has increased from a negative $4.3 million to $5.1 million. As you know, that included the special items and the one-time transfer to help reestablish that. But ultimately, you went from a negative ratio of minus 19% to 17%. I will tell you, GFOA recommends a unrestricted reserve percentage of 2 months of operating expenditures. So 17% is a good number because it's 2 months is 16.67. So you're right around that margin. And so it's a lot of hard work to not overspend and get you to that point. So everybody wants to talk about the pensions and what the net pension liability is. This year, slightly different than last year, is we actually split your two plans. So you'll see information in these two slides. We split it between miscellaneous and public safety because they're actually two separate plans with two separate formulas. Whereas last year, the prior auditor had combined them. We did not break out prior year for purposes of the slides. So when you're comparing on this slide, the current year funded status of 70.53% as compared to the prior year, just know that that 80% was the blended of the two. This comes right out of the footnote. This is your miscellaneous cost sharing plan. And the number at the top is actually the discount rate that is in use today by CalPERS, which is 7.65%. You know they have not earned 7.65% for the last 10 years. And so they're doing some adjustments, and they're actually, the GASB standard is now requiring under 68 that we report to you what a 1% change, either downwards or upwards, might do to your unfunded net pension liability that's on your books. So you can see for the miscellaneous plan that if CalPERS was to ratchet down your discount rate by 1%, your number would go from 5.8 million to 9.5 million. If it was to go up by 1%, it would go from 5.8 million to 2.8 million, much better direction. We don't anticipate that they're going to increase rates. We anticipate over the next 7 years that contributions into CalPERS will nearly double. between now and then. This is consistent. You see this is going up by 3.7 million if they drop it down to 6.65. In the back of your book, under note 10 on page 101, we've disclosed to you what the phase-in is of the discount rate changes as per CalPERS policy. You'll see that as of 18, it's going to go down to 7%. So it's going from 7.65 to 7. So you can anticipate, based on my 1% slide, you're somewhere in the middle of 3.7 million as an increase. And that, I believe staff have already considered as part of the budget. For the public safety plan, next slide, 7.65% is the rate used for that plan as well. The net pension liability for the city currently is 9 million. A 1% decline in the discount rate can put you at about 13.8 million. 1% improvement would get you at 5%, 5 million. And then overall, your funded status of the plan is 72.39%. We did pull up the survey, and we looked at that before we came in here, and I think the numbers we were looking at, you're right in and around the ballpark of most other cities. We haven't benchmarked, most cities around 70 to 74%. Those percentages funded percentages are going down as the discount rate is coming down. We're going to see those funded percentages go down. Implementation of new accounting standards. I'm going to skip this slide. There were 3 that you implemented this year. You didn't realize it. 77, which is tax abatement. 78, pensions provided through certain employer-defined benefits, and blending requirements for certain component units, and those were not-for-profits and addressed cities that had not-for-profits. All 3 of these applied to you, but did not have an effect. Audit results, we already talked about that, so I can skip that. And last is what's coming up on the last slide. New GASB pronouncements, they're never resting, so we're all staying very busy as accountants. I ordered these. The numbers on the left are out of order because they require implementation in different years. But what's important here is to see that you've got 1, 2, 3, 4, 5 of them that are applicable to you next year. Accounting and financial reporting for OPEB won't apply to you. You don't have it. Irrevocable split interest agreements, those usually are related to universities. Pension issues, which is really just a clarification. 85 is their omnibus, where they're pulling everything back together again because they've issued 50, I think it's like 50 standards in 10 years, in a decade. And then certain debt extinguishments. The ones that are really exciting, that we get excited about as accounting, is you've got your lease accounting coming up in 2020, so that any leases, what they did is try to conform to FASB, where leases that were operating leases are now considered capital leases and come on the books. There's still a lot coming out on that and implementation. Here, I don't think it'll be that significant. And then the last is just the contact information of me as your engagement partner, Ken Poon, recurring partner, managing partner, and honest, I would be remiss not to thank Andrew Roth, my senior manager, who has worked day and night on getting the capital assets here and sacrificed vacation time and time with his dad and a lot of sacrifices throughout the firm. So I thank Andrew as well as Milana and Todd, and all of the city staff have been very forthcoming. We're not an easy audit to pass. I have witnessed that myself. We asked for a lot of information, and I'm sure Milana could use a break from the audit. So with that's my prepared remarks. I'm happy to go back through any level of detail that you need. I know I'm standing between you and another agenda item, but
That's okay. This is very, very important, and we appreciate your time. Excellent, excellent report. Are there any questions at this time?
I've got one. With the city's like funds, I'm guessing you guys have obviously got investments somewhere, like financial ones. One of the laws that recently got repealed in America is that financial advisors no longer have to act in the best interests of clients. Bit of a weird one to repeal, but you guys did it anyway. Is there any way of either checking or comparing the investments that the city has and whether they're being given under the best advice and is doing the right thing for you guys.
All of the investments of the city are in very conservative accounts. We have basically a savings account with LAIF, which is a state fund, and then we have cash equivalents only that are held with the trustees.
Right.
So those cash accounts don't need an investor. We don't invest in anything
Excellent.
like
So there's
stocks.
not weird and wonderful things going on. It's
Right.
just very,
The
okay,
only
good.
other thing we have is, of course, the investment in the CFD bonds that were issued out of the CFD district, which are then the guarantee or the backing for the BFA to issue in the revenue bonds. So that's not something that's traded, but it's still considered an investment.
Yeah.
Again, not something anyone's out there messing with.
That,
So
that's fine.
overall, I don't think we really have an issue with that. The only other investment, we have an itty bitty little amount with the trustees that's held in a GIC, which is a government, no,
Guaranteed
guaranteed
investment.
investment contract.
And that's related to a bond.
Yeah.
Right.
And as a German bank, which I couldn't tell you the name of it tonight. If I tried to say it like 3 times really fast, but the name is impossible to say. But we look at their ratings, et cetera, and their underlying ratings. Note 2 to the audited financial statements provides all the detail on credit risk, as well as investments authorized by California Government Code.
Yeah.
Section, as well as any investments authorized by debt agreements can differ from government code.
As long as it's not Deutsche Bank, you're all right.
Not Deutsch, yeah.
Any other questions? Again, thank you very much. It was very, very thorough, very informative, and what's the disposition of the committee? I mean, you feel you're comfortable enough to receive and file this, basically, and not have a meeting in 2 weeks, or are you basically,
Looks very good.
Ray, do you have questions?
you have questions?
No, they did an excellent job. I mean,
She did.
especially on the capital assets and everything. I do understand that. That's why I just let it go. And you did an excellent job on that. I mean, capitalize everything and then go back and do the depreciation and accumulate the depreciation and everything. That's the hardest part. I mean, I was just knocking on my door in here in my head and said that, wow, you did an excellent job on that for a month or so. Thank you.
Yeah, I agree. The capital assets, I know that poor Milana, we ground her to bits in this process, but if it had not been poked at and proven and rechecked and compared across cities and looked at what you've gleaned from other evaluations of capital assets, et cetera, if we had fallen down on not doing that work there, we would not have been able to have gone ahead at all. And we would have lost a lot of credibility with the community too, because this has been a can kicked around for a long time, as you, I'm sure, figured out. And so it's critical that that basis is sound.
Yeah, on addition on that, I mean, not looking at the number, I just recall me, the capital assets we have now is almost 500 million. And now on 2017, and compared to 2016, it's only 48 million or something. It shows in here.
That was the sewer, yeah, for sewer, if you combine those two.
Yeah, I mean,
Absolutely.
that's
Yeah.
amazing. I mean, it's,
Yeah, it's 581 million.
There you go.
As a total add to the books,
Well-
which, you know, you took out debt to purchase some of that, so.
yeah, I could say on my side, being here for over 2 years now on the finance, I could say, yahoo! I mean, you know, that was great. Thank you. Now we could see the city's value.
Yeah, I apologize for the lateness of it, but it was a lot of work to get it on there, but I think next year we're really set for the pattern to really move the audit through the audit efficiently.
Oh, I'm excited to see that for next year.
Yeah.
So next year, we're getting a CAFRA?
No.
I called it that, just for the benefit of Todd.
No.
I told him I'd just create our own award, most improved award.
There you go.
Again, thank you very much. I
Yeah,
don't think there's any further questions.
And as you get to read the document further, I'm available for questions, and Milana knows how to reach me.
Okay, again, the council is going to be discussing this in 2 weeks, so if anything pops up,
The council will look at
I mean,
it.
tomorrow night,
night.
but final approval is in 2 weeks.
Yeah.
Yeah, I'm gonna run through the same presentation tomorrow night, so if
Great.
you
Okay.
read and you have more questions, I will be here. and
So
available.
between now and when the final approval, actually tomorrow night, if anything comes up, because it'll be fresh in your minds, right? You can present it to the council. Anyway, I would like to entertain a motion that we receive and file the presented draft audited financial statement for fiscal year June 30th, 2000, as presented this evening. Do you motion for that? So moved,
I'll make a motion
okay.
that we receive and file the draft audit as presented tonight.
Is there a second?
I'll second.
Okay.
It's been moved and seconded that we receive and file the report which we just received, the draft audit financial report for June 30th, 2016. Next item on the agenda,
Andrew, thank you very much.
Thank you, Vanessa. Thank you, Andrew.
Vanessa.
And special thanks to Malana and Todd. Oh. That's great. I'm happy.
okay, we've got
Finally.
agenda item number 3, the FY 18-19 draft budget revision 2, general fund, wastewater operations fund, CFD special revenue funds. We recommend the city council receive and file. Is there any discussion on this matter? Yes, the CFD special revenue funds?
Yes.
Yes.
The meeting that we had for the joint committee and city council on the 21st.
Yes.
We had the first draft, which we ran through all the details of that. This is just the second draft, just a few changes and tweaks that we had based on comments that night, and which I put in the observations in the staff report. So once we finally got the big tax payment in May, we were able to look and see about what the unsecured property taxes are, so we bumped that revenue in the budget up just a little bit. There was a city council request to have some money budgeted for an internal audit type function, so we budgeted some for that. The staffing for the finance department, we had at 3. We went back through the evaluation and thinking about what needs we have, so we made that 2 so that we could get the whole thing in balance, make sure everything was all right. The building maintenance service contract hadn't been added to the budget yet, but was approved by council, which begins July 1st, so I made that adjustment. And then the trustee fees, which Mr. Santos was very quick to point out, which was great, because I thought I had picked it up. Once I went back to the details, it wasn't there. It was in my notes, but not in the budget. So we made those adjustments, and in order to get everything back in balance after all of the shifts that we had, we decreased the contingency budget by $55,000, and then we had a little bit still, and we went ahead and took that out of the additional roads services that we had bumped up substantially for next year, so we just brought that back down a little bit, and the balance came right to 0, worked its way out. So it's mostly for you to look at to see if there's anything else that maybe we could consider, or something we've forgotten, or any other comments you may have for the general fund.
Any comments on the presentation? I just, this is not significant, but, and it's really, really minor, but since I brought it up at the 4-hour meeting we had last 2 weeks ago, under the city council's operating costs, where the travel budget was increased.
Yes.
the comment was made about state travel and everything, and that's one of the reasons that they were increasing it. They felt it important to stay in touch with the state legislators and people that could have an impact on issues facing the city of Beaumont. And I just made the suggestion that on the line item, we put local/state meetings, just,
Right now, we still have, there's still two categories, and we're working our way through, do we combine them, leave them separate? Ones we considered local meetings, and one we had travel and training, thinking that that would be more of the longer distance things, but we're thinking about maybe internally putting them together, really tracking them all as one line item, so that there's no confusion on that. But right now, I've left it the way that it was that night.
okay.
But we are looking at doing a swoosh on those.
Okay.
I think it makes it a little clearer, we see it all at one line.
Yeah, well, I'm just, if somebody looked at this and said, well, how come they're increasing it by, I mean, it's not a lot of money, but
Right.
$4,000, and they might question this.
What was
Anyway.
the cost adjustment from 3 full-time employees to 2 under the,
It is on page, I made notes so that I could find it again. Page 8 of the general fund budget. And if you look at the very bottom of page 8, there's finance and budgeting as the department, and then the salaries. So it took it from what we were budgeting at $678,600. It took it down to $580,100. So just shifting in, we shifted one FTE out and also changed a little bit of the education and experience at a higher level to make up some of that. And so that's how we got to that adjustment.
Any other questions? Seeing none, I will entertain a motion to recommend the city council receive and file.
This will be going to city council tomorrow night as well for them to review. And the
Okay.
idea is if there's no more questions from city council or any other suggestions, we'll complete the entire budget with the CIP with it and take it back to council on the 19th in order to have it adopted. These are the big funds that we thought needed to have the most attention.
Okay.
Can I,
Yes.
a quick one, on the, your department, 600 or something, 600, I know we increase, we have additional 92,000 for maintenance. And I look on the budget, we put it on, under the city hall and I think community center.
Yes,
Is that correct?
yes.
Okay, okay.
That-
I tried to locate that and everything, and then I found it under
Those
that
two line
two line items in there. Very good.
Right,
Thank you.
once we decided to bring that department as part of the detail in the budget, it made the most sense that if we're gonna do that we then track it by the facilities that are being cared for.
Okay.
So there's a facility code within each line item, so for contractual service, which facility, supplies, which facility, so we'll be able to see exactly what we're looking at, a little bit better level of detail, so we can do analysis after year end.
Very good. Thank you, Milana.
I think this is what's on our agenda is kind of incorrect in terms of the action that they're recommending.
Saw that too.
Yeah, I think basically what we want to do as a Finance and Audit Committee is to just receive and file on our,
Just recommended to city council.
Right.
For their
City
review.
file and
yeah,
if you have any additional changes or
Right.
considerations.
yeah,
for
we
those-
don't, it's not a done deal, so let's just
Right.
recommend, just recommend that we looked at it and we're passing it on to the council.
That we don't have issues with.
We don't have issues with it.
Yeah.
I don't know however you want to word that for the
Yeah.
minutes, but there
Yep.
should be some kind of record to denote that. Is there a motion to that effect? Andrew?
And-
Second?
I'll second it.
Steve? It's moved and second. All in favor, say aye.
Aye.
Okay, that's approved. Going on to item number 4, the, no, it's not. Reports, there are a lot of them. I don't know if you've had time to really look at them all, but I would suggest instead of going through each one, that if there's anything in these reports that you have a question about, that we could either approach it that way, or if you want to go through each one separately, whatever your desire is as a committee.
And there's 2 months presented, only because with everything that was going on, we ended up skipping looking at March. So I included March and April. And there's one report that isn't here for item month, and that's the one that does the cash balances by fund. I simply haven't had the time to sit and get that pulled apart to get those in balance. And I will have those caught up at the next meeting as well, when we present the May financials. So I will get everything caught up at that point. But the financial reports, at least from my standpoint and looking at them, I didn't see anything significant that jumped out that made me think, oh, we need to really pay attention to this. The only thing I'm really looking at now is projecting out, making sure we hit our marks for a year end against the budget, and making sure that everybody stays within budget on the expenditure side so the year ends up on a positive note.
Right. So what's the desire of the committee?
I've read through them at work. There doesn't seem to be anything outrageous or.
Say what?
I said I read through these at work today, so I didn't see anything that I needed to discuss.
Can I comment?
Yes.
Just it's a good comment. I mean, the way I see it, I mean, this is my first time seeing the report of the adjustments and everything. That was super. I mean, that's good. I mean, I could see the thing in there. I know so much details in there, just like our trial balance and everything. I mean, it's excellent. Thank you for giving us that report.
As we go along and we have more historical data, we'll be able to do more dashboard reporting. Go forward to things we can look at a one page, one glance kind of
Yes.
ratios that are important or whatever. But we're slowly building the kind of detail we need in order to develop that information that's useful. So the financials, I think, are coming along. They're looking steady. That there's no great humongous changes. So over time, we're really going to have some strong financial data.
Good. Also on the on additions on that, the variances of your monthly thing. I really appreciate that. Thanks a lot putting that. Thank you.
Yeah, these reports, these are the reports for some of you who are new to the committee that we were getting a lot of reports. Yeah. And we finally, half a year ago or so, we finally decided that we would like to see what's reported here. And it's like a cursory review. You take a look, your revenues, expenses, the prior year and this year, and you kind of see if anything is misaligned or out of step or whatever. And if it isn't, or you have a question about it, that's the time or opportunity to talk about it, because oftentimes there's an explanation. Hopefully there's an explanation. And that's what we're here for, to make sure that everything is moving along and that there's no real hiccups as we move forward. So if there's no further questions on these reports.
No.
Do you have one?
I've got one if that's possible.
Yes.
Will new changes, there seem, and obviously I've joined the committee recently, why has there been so many updates to the financial processes and things like that? Is it just moving away from the older ways to best practices, or is it?
The old ways had none. So we have been recreating and
Okay.
building
Negative.
from scratch.
That'll explain
That's right.
I think the mayor might. The
That
mayor
answers
has
that.
a little
That's
bit of a
out there
history.
with these.
The mayor-
Yeah.
Yeah, so it's starting in
Oh.
May 2015.
Yeah.
When there were the raids on the city, and management left, and all of the management of the city
Yeah.
turned over.
Welcome.
We've started developing everything from scratch at that point. So it's been an interesting
Challenging.
process, and I've been working here at the city since the end of January
go.
2016, and just, pick one project at a time, pull things apart, get it straightened out. As we straighten it out, we write a process for it, and just one at a time until we finally got, where we're at now.
Yeah.
It's been a long haul.
Long
but yeah.
haul, man.
We were completely, pretty much void of reports for an extraordinarily long period of time. And before that, we had reports that were dubious in how they were formulated. So we had reports, but we were very concerned with how they were established. And then we had no reports. And we had that for a very long time. And we were, at one point, I think the longest period of time, we were 8 months behind in our reconciling our bank statements. So you can see there was pretty much chaos on reporting during that period of
And our
time.
bank reconciliations, so that you know,
Oh,
the general account is reconciled through May the 16th.
wow.
The construction, gas tax, and evidence and LAIF are reconciled through May the 31st. Workers' comp is reconciled through April the 30th. She's working on that one. Just got the statements this morning. And our trustee accounts are all reconciled through the end of May, and we're now working on the activities for that as well. So we are all over the bank reconciliation.
That's
Those
awesome.
are staying on target. And one of the staff, when she has time, is getting the bank reconciliations onto the transparency portal. It's just taking a little time, but those are going to start appearing too. So we're getting there.
So they'll follow on one then. So is there like a framework of best practices you're adopting, or is it done in a bespoke fashion where it meets the needs that you've got?
Well, we started with some of the best practices from the GFOA. We have the CSMFO here in California, and we've looked at other cities and what they do, and then we've taken that into consideration when we got all new software and set everything up to make sure that no matter how we put it together, that we follow the best practices we can, given the staff that we have, and still meet all the internal control criteria that the state controller's office deemed us for. So we've taken everything we can and pulled it together in the best way to get it reported properly. And as you can see with the audit, as we go along and we continue to refine different areas, we find that there's this one little catch that then changes the way you have to report it. So as we go along and we keep going along, we're going to find more refinement here and there, but I'm hoping we're kind of towards the end of that, if we find anything else that needs to be pulled apart or changed slightly, that it won't have a huge impact from this point going forward. But we're trying to follow as many of the different guidances that we can find, putting them all into one pot and following it all at once.
And you've done a truly amazing amount of work there. That's
Yes, you did.
Yes. And the only other detail, and I add this because you didn't know, like, about the being raided for records and having no reports and all that. We also had the state controller's office come in, and they went through, spent a month and a half, 2 months here, and they went through everything and then handed us a bill when they left, and quite a huge report of all of the errors that we had done. We knew that we were in trouble. You know, we knew that we needed to do reports. We didn't know the verification of the number. There were lots of things we knew. But when they stepped in, they recorded everything that was wrong, as they should. And we ended up with 65, was it, the violations that they felt that we...
SEL?
It was 73,
70
75, I think.
Yeah.
Findings
So
of
it was
internal
pretty
controls.
extraordinary, yes. So then, I'm
And
just...
that was done before I got here.
Yes, yes. So, so Milan has been triaged in a lot of ways. But, so then what we did is we took a spreadsheet approach to tracking all of the state controller reported errors that we had made. And then we almost couldn't move ahead because the biggest bulk of what they said seemed to be reporting. We didn't have any reports for this or any reports for that or any controls for this because we didn't have any reports. And so at this point of being able to actually record the value of the capital assets and depreciate them and do the financial reporting that we just said, here's the 10 reports, et cetera, we are actually at the point now of meeting all of their requirements.
with this audit, with the fixed assets being recorded.
This is,
We have, we cleared every point that they made. That was the last one.
That's amazing.
So, I'm thrilled with the reports. They're so far beyond any place, and it's every report that we would need to know how much we're building up in terms of paying a particular vendor. I mean, it's just got everything in it. And, you know, I understand that the treasurer needs to see the cash report, but it's great. It really is. You've done a great job, Melania.
And
Yes.
what's great is that these come right out of the system. I mean, you ask for the report, it generates the report, I give you the report. So there's not editing to it, except with that treasury report, because I want more level of detail than the system will give me. It like lumps things together, so I don't like that. But, I mean, all of these are at your fingertips at any time, and there's more detail if you want it that we can generate at any time as well. So it's a great, very powerful system.
Okay, anything else? Pleasure of the committee. I would like to entertain a motion that we receive and file the report for March and April 2018 financial reports. Is there a motion? Andrew, second?
I second.
Second. Motion second. All in favor?
Aye.
Okay, approved. Future agenda items, anything anyone wants to put on the agenda for our next meeting, which is what, the second?
Milana, are we going to do anything at all to report to the state controller's office that we've completed this? I know we're not required to, but do you have any plans?
No,
All right.
because the report that they issued, they gave management at that time the ability to write commentary on it. And so there were explanations, brief bullet points about how we were going to go about correcting the situation. And we've just gone back through and made sure that we followed through on all of them. So there's really not even a mechanism to do that, to go back to them. So there's no plans to do that. On July the 2nd, I will be on vacation, so I will not be there.
It's only a day though, right?
Well, I'll be good for.
Well,
Come back in August and it's all burned down, that's why.
the second is, what, 2 days from the 4th, so I don't know if people may be traveling
Yeah.
or whatever, so
We,
we might want to consider going to the 9th.
I
We-
will be out of town.
On the
yeah, we
9th?
did this last year.
Oh.
Yeah. I'm going to be out of town the week of the 11th. I have to look at my
I'm out.
calendar.
America Day, isn't it?
I'm good for the second.
You're good for the 2nd? Anybody else have a comment?
I'll be out of town.
You'll be out of town.
I'll be here for the 2nd.
I'm not going anywhere.
That's great.
Yeah, for now, I'm going to be here.
you're not going anywhere,
Okay, well, let's,
Yeah, if we don't do, I can't do the 9th. I don't.
yeah, if we don't do it on the 2nd, we may not have a meeting
Yeah,
in June.
let's-
So let's plan for the 2nd, and if for some
Yeah,
reason
leave
things
it-
come up,
leave it
whatever,
right
we
now,
can
yeah.
always
Well,
adjust.
We'll get some reports prepared for you, but
Okay.
yeah,
Okay.
we need.
Okay.
Perfect.
Okay,
I have one question I'd like to, is it possible for us to get the submittal forms to us of the reports a little bit earlier than a few days before?
Our plan was, because we were waiting for the
Now,
audit.
I understand this
Right.
time is a big deal, but
Right, but we were trying to get to where we get the financial reports issued, and all of us have reviewed them so that we can post them on the Thursday before. So at least you get one more day before.
and it's a good point you bring. I'm just wondering, you know, a big part of our responsibility is to review this stuff. Is there anything, well, we went to the first Monday of the month because the council meets on the first Tuesday.
But we kind of need to keep that first meeting.
Yeah, we need to keep that, I
What
guess.
we were doing
But a
is-
lot of your stuff it closes on the last day of the month, right?
Right, well, we're always a month behind. So
Right.
at the next meeting in July, we would be providing the May financials, because just about
Okay.
that time, we have May pretty much wrapped up.
Okay,
And then you could review May, and then it would go, without any hitches, then it would go to the council at their second meeting
Okay.
of the month. And that's how we've
Yeah,
been finding it.
yeah, I agree with Steve. There's a lot here, and if we get them a few more days, it might be
Yeah.
a little easier
And I
to kind of
think
look
basically
over.
just the monthly reports that we're talking
Yeah.
about. We're not
Right.
talking about any larger efforts. We're just talking what, hopefully as the system advances can be kicked out of the system automatically once all the inputs are in place.
So when we get back, kind of schedule back on track, and we get back on the regular routine of the reporting, the next meeting, we can have the May financials that we would have had on a monthly basis. Those could be prepared easily and provided to you in advance.
I'm just thinking it's something that we can work towards in the future as systems get more normalized. We can maybe track for that. Of course, as they get more normalized, it won't be as much.
To review.
Won't be as much fun.
The excitement is there.
I have a question on, don't we update the investment policy every year?
Yes.
And, okay,
And that's something I haven't looked at yet this year.
isn't it like right about July we do it?
We're
Okay,
looking at that. I have a few drafts on my desk, different things to consider. Fortunately, we really just have basically cash equivalents. So
Yeah.
while you put this whole policy in place, we don't really take advantage of all of it. But I have that. There's also an annual calculation began limit that Vanessa was discussing. That also will be calculated and presented to council June the 19th. That's an annual thing you have to go through every year. So there's a couple of things that we have to do every
Okay.
year, and that's one.
so those could be the agenda items for July.
Okay.
And that'll also give you exposure to the full investment policy. So,
Anything else for the good of the order? If not, meeting review, I don't know that you need to do that. I trust that you diligently and duly noted everything that we did here today. Appreciate it. Thank you all for coming. Tomorrow's primary election day. Make sure you vote if you haven't already. And having said that, this meeting is adjourned.